VinFast is the face of Vietnam's automotive ambitions. They have carved their names out for the world to see after they introduced a factory in the United States, launched electric vehicles in international markets, including the US and Europe, and ultimately pushed itself to become a competitor to global electric vehicle brands like Tesla and BYD. But ever since its monumental rise in 2019, the company hasn't really been the talk of the town anymore. As a matter of fact, since its initial public offering, IPO, in 2023, the company's share price and overall market capitalization has declined massively. Here's a graph on VinFast's market capitalization, which is essentially showing just how valuable VinFast was. Here you can see that on August 19th of 2023, VinFast was once valued at over $37.16 billion, which easily made it one of the world's most valuable automotive companies. But by the 26th of August 2023, VinFast wasn't just one of the most valuable automotive companies at that time, it was actually one of the world's most valuable companies. VinFast was valued at a massive $159 billion. But ever since then, as you can see in the graph, VinFast's valuation has dropped down massively. In February of 2025, VinFast is nowhere near its previous valuation, as it now sits at just $8.2 billion, which, if we were to compare the most valuable companies by market cap today, we get to see that VinFast is at the bottom of the list, below many major Chinese EV brands, and of course, far, far below than that of Tesla. So, is this drop in valuation a sign that VinFast's dreams are failing? Does it show that Vietnam's ambitions to have a leading vehicle automotive brand of its own is at risk? Well, the answer is not necessarily. While VinFast was indeed once valued at a massive figure, one should understand that the valuation of a company in the stock market isn't always related to a company's overall performance. A company's stock price or market valuation is at times driven by speculation, investor sentiment, and broader market trends rather than its actual financial health or operational success. This surge in valuation, and then a drop, isn't also limited to just VinFast. This has occurred for so many electric vehicle car brands out there. For instance, if we were to graph out the market capitalization of NIO, which is one of China's EV car brands, we get to see that, just like VinFast, they had seen a massive rise and fall in their company valuation. Likewise, if we were to take a look at an American EV brand like Lucid Motors, we also get to see that their company valuation has skyrocketed, even at $90 billion for Lucid Motors, to drop to just around $6.7 billion today. This rise in several EV car companies is all because of excitement. Investors were dreaming about this new global EV market, which some have claimed would generate trillions of dollars for these companies. Indeed, the EV market is big. It is driven by sustainable transportation and is backed with government incentives to ensure that this switch from traditional gasoline vehicles to electric vehicles happens as smoothly as possible. Let's show you just how fast things have unfolded over the years for the electric vehicle industry. Here's a graph on the number of new cars sold that are electric on select key markets. What this graph shows is how much the EV industry has grown in just a few years. China, which is a major EV market, exploded in 2023, showing that 38% of the new cars sold are electric. That's an insane rise from just 6% in 2020. This goes to show that the enthusiasm for the electric vehicle industry is indeed real. But the only problem is that companies like VinFast were being pushed to a valuation that was so high whilst their actual operations were still in their early stages, making them vulnerable to market corrections. Let's graph out the actual operations of VinFast so far to show you just how much they are selling. Here's a graph on VinFast's total revenues in US dollars. Here you can see that VinFast has indeed been growing. Back in a December 2021 quarterly report, VinFast only had revenues of $212 million. By the latest quarter report available for September of 2024, VinFast had reported revenues of over $502 million. That's a significant increase of over 130% in just a few years. Yes, this reflects the demand for VinFast's products. People are indeed buying their electric vehicles. But this $500 million in revenue, or at an annual revenue of $1.1 billion in 2023, isn't really that much if we compare it to VinFast's valuation. If VinFast had revenues of $1.1 billion, yet was valued at over $100 billion, that wouldn't really make sense, right? No companies, or at least little companies, get valued by this much and stay that high unless there's something unique about that company. For VinFast, however, this was nothing but a so-called overvaluation, where a company is priced far beyond what its actual financial performance justifies. Moreover, if we were to graph out the quarterly net income of VinFast, we also get to see that in every single quarter, VinFast isn't actually making money. VinFast is reporting net losses after net losses. So, a company shouldn't really be valued at a high price if it weren't really making money for their shareholders, which then caused the decline in VinFast's valuation. But while all of these may seem bad, there's actually a good reason why VinFast is still a great company that has a bright future. And the reason for that is because VinFast is a Vietnamese-owned brand, which means they have an advantage when it comes to selling in their own home country. Here's a graph on the number of cars delivered by brands in Vietnam, data from VinFast itself. Here, you can see that VinFast was Vietnam's best-selling car brand, outpacing many of its competitors. Although VinFast didn't really release the data for who these competitors are, it still shows that they are already a big brand in Vietnam and are getting a lot of money from it. Secondly, VinFast as a company isn't also at risk of going bankrupt or disappearing. Sure, the company is recording net losses after net losses, but one must understand that VinFast is under the group Vingroup. Vingroup is not just one of the largest companies in Vietnam. Vingroup is one of the largest conglomerates in all of Southeast Asia. For instance, here's a graph on the total assets of Vingroup per year. Here you can see that Vingroup's total assets have rapidly risen with the latest year available for 2024 showing total assets of over $33.2 billion. Assets, in case you're not aware of such a term, are simply known as everything a company owns that has value, such as cash, real estate, factories, and investments. Vingroup's losses ranging from tens of millions to hundreds of millions of dollars is big, but Vingroup is at a height where it can still afford to sustain these losses. The company has reportedly received rounds of funding from various investors, and Vingroup giving the company the financial flexibility to continue its aggressive expansion plans. This aggressive expansion plan is essential in segmenting VinFast's brand all around the world. So far, VinFast already has numerous showrooms. As of the third quarter of 2024 report, VinFast has over 116 showrooms in Vietnam, 42 showrooms in North America, and 16 showrooms across Europe and the Middle East. It's still not a lot, but for a company that is fairly new, this is indeed aggressive expansion. The only problem that VinFast may face is whether it can continue to expand aggressively whilst maintaining or being able to raise funds. This is a major problem that VinFast would face in the future if it continues to report net losses. Sure, the company had recently received new fundings of $3.5 billion. But the question is whether VinFast can actually make a profit in the face of big competitors like Tesla and BYD. That is the big question that nobody can really answer. It all lies in the management of VinFast. So, to put this video into simplicity, Vietnam's VinFast isn't failing, it's growing. Its share price is just one part of the story. But if you were to take a look at the company's financial statements and its overall sales, VinFast is indeed being sought after. But anyway, do let us know what you think. Thanks for watching.